Honorable Atta Issa. Thank you very much for your time and good morning to you.
Thank you for the opportunity, and good morning to you and your listeners.
I hope you're well.
Yes, I'm doing well.
In fact, many Ghanaians will have heard $10 billion being used by the BOG for intermediation. Exactly what does this mean? Because it seems those who are criticized seem to sound as if BOG is giving away $10 billion free of charge.
All right. So let me begin by clarifying some major misunderstandings, particularly in relation to the financial intermediation by the Bank of Ghana in ensuring adequate liquidity in the forex market. The 10 billion reference as BOG intermediation spending is not money lost or stolen or spent recklessly. It represents liquidity support and financial intermediation undertaken by the Bank of Ghana to stabilize Ghana's financial systems during the severe periods of economic distress and also ever-rising demand for imported goods. The intermediation, by definition, refers to the central bank stepping in to support financial institutions and markets when normal credit flows are disrupted. This is a standard central banking function globally. That is what I'm just trying to establish, that if you look at the analysis, it represents central banking across the globe. So, if anybody tells you that the Bank of Ghana has done anything reckless, then they don't understand global financing. The second issue too is that the intermediation normally comes in as a temporary bridge between the distressed financial institutions, government financing needs, and wider economy when normal market funding breaks down. So the government only comes into the central bank to show up liquidity support for the forex market when the traditional way that people can get functional currency of US dollars and others runs out or they cannot get it. Now, in 2025, Ghana was best structured program, tight global credit condition as a result of the ballooning public debt we had. Then you also look at the interest rate and then fragile investor confidence because of our borrowing constraints, and then the domestic interest rate. However, why the Bank of Ghana intervened this year was as a result of the fact that the BOG intervention was aimed at preventing liquidity shortages in banks. And that's why, if you remember, people always say that when they go to the bank, they don't have the dollars. But Ghana, we do not manufacture dollars. The dollars is brought in to facilitate trade. That is the essence of the intermediation. The second issue too is that the Bank of Ghana did that to ensure government could meet essential obligations, especially with foreign or external components of our debt. Also to support credit flows to critical sectors of the economy. The government also did that to stabilize the Cedi and interest environment. But what these people, the minority and others, have just done, main objective of they are saying that is the only reason why the Cedi is stabilized. There is nothing wrong with using your currency to buy more reserves for foreign trade, even in the US, and I'll demonstrate that soon. So, what could be the impact of the Ghana economy if the Bank of Ghana has not pumped in the $10 billion? One, banks could have reduced lending drastically, especially foreign components of their lending. The second issue is that businesses will have failed because if they need dollars to transact foreign transactions and they are unable to get, who suffers? All of us will suffer. Now, also salaries and statutory payments will have been at risk because if there is no trade, it means that more profit and corporate taxes will have been reduced. And then to service our critical and statutory demands, we wouldn't have money to do that. Also, confidence in the recovery would have collapsed. Currently, from January to June, Ghana received almost $938 million as a result of increased investor confidence. And this was some of the strategies that the government used to do that. Now, look at the global context. Like I indicated, Ghana did not do what other countries haven't done before. The US recently injected trillion. The ECB and the Bank of England also injected almost $1 trillion. African central banks expanded balance sheet massively to support other countries with difficulties. So what matters is how and when and with what safeguards, not the number or the quantum. Why do we do it? On what authority? And with what imports and aims and objectives? That should be the question that I think that we should look at. So for me, Ghana intervention in 2025 was the modest if you look at the scale of risks involved, especially what we inherited as a country. Now look at the impact of these things on inflation and steam. The MPP, I heard them argue that the intervention wasn't inflation and depreciation of our currency. That argument ignores the reality that the CD is doing better at 34% appreciation against major trading currencies. Inflation too currently is at 6%, 6.3%. That suggested that Ghana is doing well. So the inflation, even the 6.5, what led to the 6.5 was largely because of imported inflation or energy prices and global financing tightening. This is what we call what we don't have control over. But if you had control over it or it was an endogenous factor, I'm sure Ghana would have been running a disinflation of negative inflation. So my point is that without the BAG intervention, steady rate, interest rate would have spiked higher and the city would have faced disorderly depreciation. And that is not what we are seeing in the market as we speak. Cedi is a single digit inflation. Cedi is appreciating against major trading currencies, and inflation is at 6%. So based on that, for me, I believe that public education must improve because when people distort the information like government spends $10 billion in the forex market, if we don't come and explain this better to the Ghanaian, then people just listen to whatever is churned out in the media. And so I think that the Bank of Ghana must intensify its communication powers to make sure that people get to know the truth. I also want to use this opportunity to call on the Parliamentary Select Committee on Finance and Economy to look at or provide oversight responsibility over the BOG to ensure that the spending is done within the confines of the law to make sure that this is legal. We must make sure that this is necessary, and then we must make sure that this is protective and temporary. It shouldn't be a permanent feature. Once we are diversifying the economy into a 24-hour economy, we expect the productive capacity of this country to improve, and then profit will also increase. So once we get all those things, we don't need to provide those temporary intermediation that is done by the Bank of Ghana.
Interesting, but let me go back to one of the things you said at the very beginning. You said this is not money that is lost. Explain that.
Hello?
You said that this is not money that is lost. It's not.
Yes.
Yes. Explain that. Exactly what do you mean when you say that?
So for example, if you look at last year, the Bank of Ghana made a total loss of about 60 billion Ghana cedis, which is still subject to a probe. But when I say it is not money that is lost, let me explain that. Ghana has, in the previous regime, had a participatory interest in the gold mines of 13% carried interest rate. So all the profit is repatriated. Now, what government is doing simply is that all gold purchases should be done in cedis, and then the gold board is a mandated board to export it and get more in it. So when Bank of Ghana gives a cedi equivalent to the gold board, and they sell it, they have more cedis, dollars into our kitty or the reserves. And the purpose of reserves is to make sure that, and that's how come we normally measure reserves in terms of import cover. Anytime you hear reserves being mentioned, they mention import cover. The reason is because the reserves that you are having, you only spend it in servicing your debt and also in the importation of goods and services. So if the government of Ghana use the interbank mediation process or the commercial bank mediation process to provide those dollars to enable businesses and firms have access to foreign currency to transact their businesses. How is this stolen money? In the first place, one of the objectives of establishment of a central bank, or let's say in this case, Bank of Ghana, is to stabilize your cedi. So any effort that is intended to stabilize cedi, that should be pursued. And the government is clear that the money that is introduced into the forex market, it is trade. So you need dollars because what causes depreciation is when more cedi is chasing fewer dollars. Now we have abundance because of the gold purchase. So when you have dollars, why do you let businesses and firms try to
We've lost Honorable Atta Issa on the line, and this is, of course, Kojo Ponkruma, who is Member of Parliament for Afonse Ayerebi, speaking about this issue.
Yes.
The exchange rate. Please, does this make you feel vindicated?
No, I don't feel vindicated. I think, first of all, what's important is that they are being honest with what's going on. You know, initially they were claiming that there was no market intermediation. Then they said it's good governance. And we kept drawing their attention that we've read the numbers. What they are doing is that they are doing a lot of market intermediation. It is good that now they are admitting. But it also then allows everybody who is watching to be able to, participate in the conversation about how sustainable it is. And more importantly, what alternative uses that money can be put to. That money can be put to a lot of uses that will create jobs for young people, create development for the economy. But they have, as a policy decision, decided to use it for market intermediation. So for me, I'm happy that they have admitted the truth now. And I'm sure now civil society organizations and the youth can all now participate in the conversation of what alternative uses that money can be used to, and even how sustainable this approach is. Yeah.
All right, sir. Thank you.
Well, we've been joined on the line by Honorable Atta Issa. Again, we lost him briefly there. Thank you for rejoining us. You were explaining to us why you insist that this is not a loss.
Yeah.
In fact, the money is not lost.
Yes. So like I indicated, it is not a loss because under the gold purchase program, the Bank of Ghana released an equivalent Cedi to the gold board to purchase gold.
Hello, no.
Your reserve is an import cover.
Mm-hmm.
What it simply means is that when importers want forex to trade, Ghana still be able to supply those products. And look at the theory. Classical economics will tell you that central banks exist to protect and stabilize the nation's currency. So even if it is as a result of the intermediation of 10 billion that has resulted in the stability of our city, there's nothing wrong with that in theory. However, the difference here is key. In the previous administration, we saw that all our natural resources were exported to get forex. At the same time, we use forex in our domestic market to also buy the forex. But we all know that the functional currency of Ghana in Ghanaian economy is the cedi. So the Bank of Ghana now gives the cedi equivalent to gold bought to purchase. And then when we sell the gold, we get the forex and put it as reserves in order to deal with the imports of our nation. So if government pumps in 10 billion cedis to facilitate trade by private firms and industry, what is wrong with that? So this is not a situation of corruption. This is just a situation of intermediation. And that is even the whole concept of banking. Let me give this simple example. So now, if you look at purpose of banking, somebody has a loanable fund sitting, an idle fund that is not used for anything. Then somebody also needs the same funds to expand business. Then banks get involved to provide an intermediation from the people that have the excess money to the people that need the money. That is the purpose of intermediation. So in this similar circumstance, Bank of Ghana has reserves, which the dollar and the other European countries see. He has this is what we have. Then we have businesses who need to import goods and services into our country. It means that they also demand the forex. Then you create an intermediation of giving them the forex at the same time they too is able to import goods and services. So that is why I say it is disingenuous to suggest that as a result of the intervention, that is in it.
Oh, can you hear me?
Equity loss of 60 trillion Ghana cedis. It simply means that we just resulted in printing money. This is not the situation that we find ourselves currently. So that's what I just wanted to say.
And I'll come back to two issues that have been raised by your colleague Kojo Ponkruma. But before that, the 10 billion that has been spent, has it been worth it? The result that we are seeing in terms of the impact it's had on the market.
Of course. Let me just give you a few examples. So the 10 billion what it simply means is that we have increased volumes of export by businesses and firms. That will increase the profit of companies. And then once profit of companies are increased, it means the corporate tax of government is also likely to increase. The second thing is that it has achieved the policy objective of maintaining the Cedi. For the first time since 2019, the Cedi hasn't appreciated against some three major currencies, which is the dollar, the pound, and euro. This is the first time the Cedi has appreciated against these currencies by an average of 34%. So if it hasn't achieved the results, why are we seeing this level of stability? Now, if it was a threat, unlike in the previous administration, what we saw in the other previous administration was that they pump in the money with the purpose of just stabilizing the currency without thinking about its rippling effect on goods and services in the market. That is why Bloomberg, IMF, African Development Bank all raise issues of the artificial nature of our intervention. However, this current one, the IMF has already categorically said that all these reforms that we are doing currently have yielded positive results with induced and productive investments. So for me, it has achieved the aim of stability of our currency. It has also achieved the price stability of goods and services. Despite these interventions, still go to the market, you see the price of goods and services are lower. So if the idea was that when we pump in more dollars, things will go up, like they argue, why is inflation still at 6.3% within the 6 to 10% band for continuous 11 months? So this cannot be conjured. So for me, I believe that within the short to medium term, this is the way. However, I'm already cautioning, like I indicated in the earlier submission, that the Bank of Ghana and the government of Ghana should begin effort in operationalizing the 24-hour economy to expand our productive capacity so that we reduce importation. Because currently, poultry, frozen chicken alone, we spend $1 billion to import frozen chicken. If the Cook Kitty program is successful, it means that import will cut by $1 billion. Cement, that's the ceramics and all those. So we still import almost 750 million US dollars. We spent a lot on things we can manufacture locally. So if we operationalize the 24-hour economy properly, it means that we'll be able to diversify our economy and expand the productive capacity of this nation, thereby reducing our import dependency. Once we do that, we don't need to pump in manufactured goods for our nation. So
Hello. Oh, we have a difficulty, and perhaps we have to leave it there. I was going to raise the issue of Kojo Ponkruma. And this is Kojo Ponkruma's concern, and we'll speak to somebody who agrees with this concern that was raised by Kojo Ponkruma shortly.
Pumped about $10 billion.
Yes.
The exchange rate. Please, does this make you feel vindicated?
No, I don't feel vindicated. I think, first of all, what's important is that they are being honest with what's going on. You know, initially they were claiming that there was no market intermediation. Then they said it's good governance. And we kept drawing their attention that we've read the numbers. What they are doing is that they are doing a lot of market intermediation. It is good that now they are admitting. But it also then allows everybody who is watching to be able to, participate.
Well, so okay, we have a difficulty with that particular video. We'll get it back and play it for you. What Kojo Ponkruma thinks, but I think basically he was raising questions with alternative uses that particular $10 billion can be put to. We'll try and get Honorable Atta Issa back for him to also respond to that particular issue that has been raised. But let's speak to someone who agrees with this view, the view of alternative uses. Nino Hansen Norte is former member of parliament for Tema Central. He joins us on the line. Thank you very much for your time. Good morning to you.
Good morning, my brother. Good morning to the people of Ghana and the good listeners of Radio Gold.
I hope you're well.
Oh, I'm doing very well this morning, by God's grace.
It's nice to have you on the line. First,
Sure.
Your position on this whole matter of $10 billion being used for what the Bank of Ghana calls intermediation on the market. Where do you stand?
So, firstly, I want to say that what Atta Issa said initially are all true.